The ascending channel on the Bitcoin chart has been broken. Does this mean we're facing a sharp drop in price? Are you curious to know the answer to this question? Let's get started. Hi there. Welcome to another episode of the Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and the altcoin of your choice. As you already know, we look at the charts from 3 different perspectives: technical, on-chain, and, of course, our fantastic fire charts. This means that the condensed analytical knowledge we serve up here simply can't be found anywhere else on the internet. You appreciate this, as we're really gathering a lot of subscribers under these videos. Kanga Trends is getting quite a few as well. I'm very grateful to you for that, because it shows me that my work has value and that you truly appreciate it. But I also know that many people who regularly watch Kanga Trends don't actually subscribe to this show or even to the channel itself. That's why now is the perfect time to hit subscribe, leave a like, drop a comment even if it's just for the competition, and make sure to join me here again next week. And of course, remember that the content of this material does not constitute investment advice. It is solely my subjective opinion on what is happening on cryptocurrency charts. And I encourage you to do your own research, which you can do, for example, through the competition I'll mention at the end of this video. So if you're ready, as always, grab your coffee and let's get started. And on the Bitcoin chart, at first glance, nothing seems to be happening, but it's worth noting that we're actually seeing a certain breakout, a break of the upward trend, which formed a rising channel that, by its nature, is unfortunately a bearish pattern. And here we can see a breakout that is moving downwards, dropping even to levels around $33,000. Is this dangerous? Could these declines deepen further? We'll get to that in a moment. First, let's check exactly what happened in relation to those points we identified as critical in the previous material. And such critical points included, for example, the level of $106,000, which is marked here with this horizontal line, and which coincides with the peaks determined by the candle closes set back in January of this year. Well, that was the then all-time high. Well, the ATH, let's say, was set a bit higher, exactly at the wick. However, here we had candle closes, which served as an important reference point for us in the context of key support levels. We saw that Bitcoin broke through this support quite quickly and dipped a bit deeper. We expected that such a scenario might occur, which is why our second critical support was around $105,000, that is, these peaks we can see here. We said at the time that if Bitcoin closed with a single candle 3% below that value, it would probably signal further declines. Such a single candle, or simply 2 red ones in a row. And what happened? We had a single red candle, with a drop of less than 1%. And then we experienced 3 green candles, which were a clear rebound and a renewed attempt to reach the $106,000 level. So, theoretically, the bulls took control. The bulls are aware of how crucial the $105,000 mark is, and that this area needs to be defended. And we can see that, despite everything, returning to our channel, a breakout from this formation may occur. In fact, the breakout has already happened, but it could go much deeper. We can measure such a formation and verify to what level this breakout might extend. All we need to do is take a vertical line and draw it along the height of such a channel. I'll move it so that it's precise, and then place it exactly at the point where the breakout occurs, which is here. And based on this line, we can see what the range of the movement is. And here it reaches the level of about $97,500. What's more, it's worth marking a horizontal line here now, so that later we have a very clear point of reference. We'll remove this line now. And notice that this line matches perfectly with these peaks that were locally marked here, so theoretically, Bitcoin is at risk of falling even below $98,000. But do these declines really have to happen? It's worth taking a look at the indicators here, as they're really sending some very interesting signals. We'll start, of course, with our RSI. The RSI, firstly, is touching the level of 50, which is the boundary between the bear zone below and the bull zone above. Here, there's a battle going on and an attempt to defend this level, so that the bulls can regain control and push not only the indicator but also the price upwards. And we can see that with this situation, a divergence is appearing, a divergence that we can observe here. We'll mark it in yellow. It's not even a typical divergence. Firstly, what we have here is a hidden divergence, if anything. However, it's worth noting that this divergence is already starting to spread over quite a wide area, which means that soon it will extend beyond the 14-day period, so we won't be talking about a typical RSI divergence here, but rather about a discrepancy between the RSI momentum and the price. But we'll leave that aside. Nevertheless, at the moment we are dealing here with a hidden bullish divergence, which has the potential to push the price upwards. But at the same time, it's worth noting that if the price falls below these levels here, at the height of this particular candle, that is, around exactly $103,000, if a candle closes below this value, then this divergence will be negated, which means it will no longer be valid. Nevertheless, for the time being, we are observing it, we can see the defense of the 50 level, so it's still bullish. Apart from that, it's worth paying attention to the MACD. And on the MACD, there's a change in momentum occurring. We had negative momentum, which is visible on the histogram, but now a certain reversal is taking place. Even though the moving averages are heading downwards, we can see that the histogram is bouncing upwards and gaining this bullish momentum, so the strength is shifting to the bullish side. However, it's also worth looking at one more indicator, and that will be the stochastic RSI, which has also reached a very strong oversold area, where a complete reset is now taking place. If we see similar behavior across many indicators, it may suggest that in this case, there is indeed a greater likelihood of a breakout upwards rather than a continuation of the downward movement. Nevertheless, in my own strategy, I personally assume that it is worth, just in case, placing buy orders in those areas that are theoretically within reach, if only because it might be just the wicks that drop there, and the price rebound could be instantaneous. That's why, in the space between $100,000 and $98,000, I personally see a buying opportunity and will be leaving orders here in order to buy more Bitcoin in the event of a possible dip. And if the whole issue of channels seems complicated to you, remember that you can turn to lessons from Kanga University. A lesson on rising channels, falling channels, and similar formations can be found in the description of this video. Click, have a look, and find out more. In situations where uncertainty arises and indicators are definitely not enough for us, it's worth taking a look at fire charts and supporting your analysis with other, perhaps stronger, indicators in this case. I glance at fire charts and I can see, above all, that our blue line, which marks the price of Bitcoin here, is meeting, or rather, oscillating just above a certain area that is gaining liquidity. We can see a yellow line here, and we can see, perhaps I'll turn off the information next to my cursor so that the whole message is clear, that for basically the past 2 days, in this area, which is around $104,000, the number of buy orders has been increasing. They are spread out fairly widely, although they don't have a significant volume, because from what I can see, it's only about $10 million in stablecoins, so it's not a huge amount. But what we can see, and what is most important for us, is that demand is appearing in this area and there is a defense taking place here. As for resistance levels, we don't see high volumes all the way up to the $110,000 mark. It's only around that area that about $22.5 million in Bitcoin appears, waiting to be offloaded onto the market if and when that value is basically reached. Later on, we can see further resistance levels around 111,000. Here, we have $13 million in Bitcoin, and at 112,000, which is around the all-time high, just over 18 million. However, let's be careful, because situations like this can also result in the rug being pulled. A rug pull is a situation where, if the price approaches these areas, the whales, knowing that we're watching this chart, simply withdraw their orders, causing a deeper drop. That's why the orders I personally set between 100,000 and 98,000, in my opinion, may make sense, although they might not necessarily be filled. It's simply worth having such a backup and being prepared for all possible scenarios. Besides that, it's worth taking a look at the CVD. And here, a lot is happening and it's really positive, because we can see that the brown line, which represents whale movements, is currently the most active. Whales, meaning those wallets that hold between $1 million and $10 million in stablecoins, are buying Bitcoin at current prices and are gently pushing the price upwards. Following them are the purple wallets, which are the second largest. They hold between $100,000 and $1 million in their balance, and they are also buying Bitcoin. Interestingly, smaller wallets, including retail investors represented by our orange line, are not interested in the market. And Ethereum is moving in line with the scenario outlined a week ago. So, above all, we can see the formation of an ascending triangle. Admittedly, we had to slightly adjust this trend line down here, but the overall structure remains unchanged. So, we can see the trend line I just mentioned, and we can see the upper edge of this triangle, which is our grey box, further supported by the 200-day moving average. As we know, we marked out this grey box many months ago. It continues to be respected by the price, whether in a downward or upward trend. We can see that every time Ethereum reaches this area, it gathers liquidity here, and this results in declines. Then, the demand-side liquidity is found below, and again, each time, Ethereum pushes its price upwards. It's worth paying attention to the RSI, because there was a certain risk here that a bearish divergence might appear. If we look at the RSI, we can see a continuous downward trend, but it's important to note that we're observing this on a daily time frame longer than 14 days, which means that a typical, classic divergence will no longer occur here. We will see a distinction here in the case of momentum. Well, it is a slightly weaker point of reference. Nevertheless, it is worth observing over the longer term, because there may be a situation where Ethereum pushes even higher and experiences some divergences on the RSI, which would result in further declines and, for example, the formation of a rising channel here instead of an ascending triangle. At the moment, I don't see this happening. For now, I can see that demand is increasing and the chances of breaking through this level, this grey box, are really growing all the time. You can also see this on other indicators, because if we take a look at the MACD, for example, we can see that, just like with Bitcoin, our histogram is turning and the bullish momentum is picking up pace. Similarly, if we look at the stochastic RSI, the same one we considered for Bitcoin, we can also see here that we have a very deep reset, a very strong oversold condition, I would even say, which could result in Ethereum bouncing upwards soon. But is it worth placing buy orders a bit lower? It's always worth it. That's why, for me personally, the areas around 2,330, that is, around this low, these two wicks stretching out here, are ideal. It's worth placing buy orders here in case of any potential sharp drops. Will they actually happen? In my opinion, it's not very likely, but it's simply worth having a plan B. The fireworks on Ethereum, on the other hand, highlight the resistance, which is at the level of 2,700, that is, at the lower boundary of our box. And that's exactly this white line we can see here. At this moment, precisely as this video is being recorded, it carries a volume of $10.5 million in Ethereum, waiting to be dumped onto the market as soon as this price level is reached. Who is currently interested in buying Ethereum? And here we see something unusual, because a green line appears, and this green line represents wallets holding between $1,000 and $10,000, waiting to buy Ethereum, but whales are also active. We can see this brown line, it has dropped slightly here, but in my opinion, this is only temporary, so there's nothing to worry about, it's still hovering quite high. As we can also see, the purple wallets are pushing the price of Ethereum upwards. So, from this perspective, whether technical or looking at the Ethereum fire charts, things are still quite bullish for now. The altcoin we're putting under the microscope today is Polygon, Polygon Pool, or simply Xmatic. And, unfortunately, I don't have good news for you here. In my opinion, Polygon is looking very, very weak on its chart. Very, very bad. We can see a long-term downward trend, which so far shows no potential for a reversal. There's no pattern here that would suggest this trend is slowing down. Let's even switch our time frame from daily to weekly and see how it looks from a broader perspective. Well, we can still see deep declines all the time. These declines, as we can see, are progressing to the extent that we're getting ever deeper lows, and the lows that were set many months ago are still being surpassed. It's not just deeper peaks anymore, but also deeper troughs. What's more, exactly, we're lacking any trend reversal formations here. So, we're not dealing with any double bottom here. There's also no inverted head and shoulders formation that could actually make me interested in Polygon at this point. The only thing I'm considering with Polygon is purely structural trading, from range to range, so for example from the area of around 30 cents to the area of about 15 cents. Because usually Polygon moves within such patterns, at least until it breaks out of them. That's why, in my opinion, there's no point in using any indicators here. Polygon simply looks weak and doesn't have the potential to clearly signal a reversal of the ongoing negative trend anytime soon. And if you're interested in short-term price action on Polygon and would like to take part in it, then it's worth paying attention to what's happening on the fire charts. On the fire charts, we can see that some buy orders are being placed around the 20-cent mark. And they carry a volume of around $250,000, so there will definitely be some support here. It's slightly higher than the level I pointed out, which was around 15 cents. And it's also worth paying attention to potential resistance levels, which start to appear around 25 cents, so a bit lower than the resistance I pointed out. So here, from one boundary to the other, there might be an opportunity for some sensible trading. Nevertheless, it's worth paying attention to the CVD, and here we have a clear signal. No one, absolutely no one at the moment, and above all, actively, is interested in trading Polygon. And if you would like to bring back your altcoin, remember that it is a very simple thing to do. All you have to do is register on Kanga. You'll find the registration link in the description of this video. Choose the cryptocurrency that interests you most and let me know about it in the comments. Just remember 3 basic rules. Firstly, it can't be KNG. Secondly, it can't be any memecoin. And thirdly, it must, and I really mean must, be a crypto from Kanga. So, you know what to do. Let me know in the comments which crypto you'd like to see in the next video. ETFs, and something has happened here. We saw as many as 3 days of high-volume sell-offs, which followed one after another, basically, but by Tuesday, equally high buying volumes had appeared in their place. So, for now, we can see that Bitcoin, hovering around its all-time high, is quite a tempting morsel to cash out, because resistance levels are usually where people sell. But despite everything, ETFs still see further growth potential and, very quickly after the short-term cashing out, they start buying again. So, while things may look a little uncertain here, the outlook remains optimistic overall. On-chain analysis, and within it, 3 indicators. This time, they won't be critical deviations, as was the case last week. But now we'll refer to the so-called auxiliary indicators, auxiliary, meaning those that provide us with additional value in situations where we want to assess critical deviations, but we can't rely on them directly. For example, stablecoins in circulation, the amount of stablecoins in circulation, and if that increases, we assume that purchasing power is also rising, because stablecoins are introduced to the market precisely for the purpose of buying Bitcoin and other cryptocurrencies. And we can see our orange line, that is, the indicator line, constantly climbing upwards and reaching new highs. That's why this is a very, very positive signal for Bitcoin's further price action. It's also worth paying attention to active addresses, as these can sometimes indicate critical deviations in Bitcoin. Every time they reach these peaks, as we can see here and here, it was a signal suggesting that we might be approaching the top of a bull market or simply a local peak in Bitcoin. Meanwhile, at present we can see that interest in Bitcoin isn't actually that high, and for many months now it has remained at a relatively steady level. That's why, as long as these peaks aren't being pushed a bit higher, I personally don't expect the Bitcoin price to reach a top. And then there's the amount of Bitcoin on exchanges, which is an indicator we've been watching for quite some time, hoping that the recent lows that were set would be broken. And look, that's exactly what's happening, because we can see that for several months we kept reaching the same level, and Bitcoin wasn't able to break through that level on this indicator. It wasn't until today, because now we're seeing a sharp drop, and Bitcoin is rapidly disappearing from cryptocurrency exchanges. It's an interesting comparison. Bitcoin is leaving cryptocurrency exchanges, while at the same time, the amount of stablecoins on those exchanges is increasing. This is a positive divergence, a very positive one, indicating that demand is constantly growing, even though it's June and, theoretically, the holiday season. We're done with the analysis, so let's move on to the competition. First, the rules. Choose one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Polygon. Pick the one that interests you the most and present your own analysis, whether it's from a technical, on-chain, fire chart, sentiment, or fundamental perspective, whatever you like. And remember, you absolutely don't have to agree with me. The author of the most interesting comment, posted by Friday at midnight, will receive 20 KNG from me. And the winner for the previous episode is Mikhail Dragauka, who analyzed Bitcoin. A very nice comment. Now, Mikhail, please get in touch with support to claim your prize. That's all for today. If you enjoyed it, and I firmly believe you did, and this is your first time here, be sure to subscribe. And if this isn't your first time here, I encourage you to give a thumbs up and leave a comment. And please rate this episode on a scale from 1 to 8, where 1 means poor, bland, I don't want to see any more. 8 is fantastic and I want more of it, and if it's an 8, well, we'll see each other next week.